Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Schiller here in studio at the New York Stock Exchange. Well, stocks are a little changed today after we did see some volatility yesterday in the market. Concerns about stronger than expected growth and thus sticky inflation has continued to be a storyline that we continue to cover in this market. In fact, new data from the Institute for Supply Management show that economic activity in the services sector expanded for the sixth consecutive month in December, while the U.S. 10-year Treasury yield did approach 4.7%. We got a big show on tap today. A lot of action, of course, that we're covering on the show, and let's take a look at what is in store. Our parent company, Intercontinental Exchange, has provided the latest glimpse of the housing sector, and our resident expert, Andy Walden, he's ICE's VP of Research and Analysis, is going to tell us what it means for potential home buyers. Meanwhile, Meta, the parent company of Facebook, announcing a major change to its policy on Tuesday, doing away with third-party fact-checking and replacing it with community notes written by users, similar to X. Well, CES 2025 is in full swing, and we'll be speaking with companies at this year's premier tech event throughout the hour, including one startup that raised nearly $700 million in funding last month. Now, the second wave of this week's jobs data trifecta arrived just less than an hour ago. Investors getting their hands on some fresh ADP private payroll data. That's for the month of December. And you see the number on the screen. According to the data, the U.S. economy added 122,000 jobs in the private sector last month. That was a little bit less than expected and does lead into the non-farm payrolls report that we'll get on Friday, the marquee jobs report that we do get on the first Friday of every month to give investors a better sense as to where the economy is headed. As we start the second week of January, our market outlook does continue, and today with housing. The spring buying season will be here before we know it. It's a seasonally strong period for the housing market. And joining me now with more as the year gets underway is Andy Walden. He's Vice President of Research and Analysis at Intercontinental Exchange, or ICE for short. Andy, welcome.
Thank you for having me. I appreciate it.
Always great to have you in studio, of course, one of our resident expert guests. How does housing look as we start 2025?
Yeah, and as you know, there have been two key components we've been talking about in housing: affordability and interest rate dynamics, and the inventory dynamics out there in the market. Affordability is still a challenge as we enter this year. We know interest rates have taken a leg up. It's going to take some time for that affordability dynamic to improve and normalize over time. From an inventory perspective, that's where we're seeing some of the bright spots in the housing market. We entered at this point last year at a 36% deficit in terms of the number of homes available for sale. That was cut to 22% throughout the year. That's the best level we've seen since 2020. So as we enter the spring buying season, still pretty strong demand out there in the market and more housing out there for folks to shop amongst as well.
Inventory, some help there is definitely
Finally, right?
A good thing. Exactly. And we see data indicating that home prices have been on the rise, at least toward the end of 2024,
Sure.
with those November home prices, according to ICE data, up 3.3%. What was behind that?
Yeah, there's a couple of different drivers there, and that's a pickup from 3.1% the month prior, so you're seeing what appears to be a little bit of reacceleration out there in the market. Some of that is true, right? If you look at the underlying data, part of this is being driven by August and September. We know that mortgage rates got down to the near 6% range as we headed into that first rate cut. That did provide a little bit of strength for demand and a little bit of strength for home prices as we got into October and November of last year. So that's part of why you're seeing that little bit of a pickup. The other piece is just simply what happened a year ago. When we look at that year-over-year home price growth rate, it's simply where are prices today, where were they last year? And when you look at that movement over time, we're now comparing to the fourth quarter of 2023. It got really soft at that point last year. That's where we saw the highest rates in this cycle. We saw mortgage rates get above 7.5%, near 8%. Saw demand soften a little bit, prices soften. And so when you look at that year-over-year comparison, part of the reason that you're seeing what looks like acceleration in home price growth is just simply because we have weaker prices from a year ago. That should shift a little bit as we move into early 2025.
I'm curious about that as we make this shift, Andy, in terms of what this could portend as to what is to come.
Yeah, and when you look at that annual price growth rate, I think you could see another step up here as we get into December, right? We were still relatively weak in the fourth quarter in December 2023. But when you look at what's happening on the ground right now, and you look at November, you mentioned seasonally November is a little bit weaker. When you pull that seasonality out, and if you annualize that and said, what if we saw November happen for 12 consecutive months, it would be positive 2.7%. That's less than the plus 3.3% we're seeing right now. And so that suggests that all else the same, and things could move if interest rates move lower, you could see demand pick up. But you could see after a couple of months of that rate picking up, you could see that soften a little bit again as we move into the early stages of 2025.
Talk to me more about what we're seeing on a geographic basis in different markets around the country.
Yeah, and that story really hasn't changed all that much, right? It's the Midwest and Northeast remain strong, right? The Midwest, you're seeing relative affordability, not only compared to other areas of the country, but when you compare each market to its long run average, you're seeing better home affordability in the Midwest. That's improving demand a little bit. When you look at the Northeast, the story is just a lack of supply and very slow return of supply. And so those are the areas that have been leading the country in terms of home price growth. I think it's reasonable to expect that to continue as we move into early 2025. And then when you look at some of the softer areas, it's the Southeast, right? You look at a quarter of markets are now back to normal levels of inventory. 15% more could join that list this year if current trends hold true. They're primarily in the southeastern part of the country. Florida stands out, Texas stands out as some of the softer areas from a price perspective, and you could see other areas of the Southeast soften up a little bit as that inventory returns as well.
How can our viewers use ICE services to help them with this process?
It's a really good question. In all likelihood, they already are, right? Whether it's a home seller listing their home on the multiple listing service or a buyer searching for homes on the MLS, whether they're going through the origination process, taking out a loan, shopping for the best rate, or they've already bought a home and they're making their mortgage payments through their servicing system or are working in their online platform, they're likely interacting with our technology whether they know it or not. And that's kind of the vision of the ICE Mortgage Technology Group, is similar to the New York Stock Exchange where we sit here today, right? It's a transactional, it brings buyers and sellers together. It creates efficiency and trust in that trading process. The same thing is taking place behind the scenes in terms of ICE Mortgage Technology, creating that end-to-end ecosystem, creating transparency, ease, and cost effectiveness throughout that entire process.
Lastly, Andy, what do you think is the best way for people to look at the housing market throughout 2025 when making their own investing decisions?
Yeah, it's a good question. Obviously, one of the biggest financial decisions folks make, it tends to be a very emotional decision when you're going through the home buying process as well. And I think that's where that data can come in and really be effective for folks, taking that emotional component away. Obviously, the reason the data is important is to make stronger, better, faster, more impactful decisions, both in your investing space and in your own personal life. And so utilizing all of that data that's now at your fingertips to make the most effective and efficient and intelligent decisions when you're making that home purchase.
Andy Walden, he's Vice President of Research and Analysis at the New York Stock Exchange's parent company, Intercontinental Exchange, or ICE for short. Andy, thank you as always.
Thanks for having me. Appreciate it.
It's great to have you.
Yeah.
All right, well, stay with us because up next, social media platforms are taking a new shape this year, including Facebook through its parent company, Meta. An expert is going to tell us more about a major shift that company made when it comes to moderation and speech up next.
Obvious Ventures is a firm renowned for its world-positive investing approach, focusing on companies that aim to make a meaningful impact across industries, and has been instrumental in backing some companies that innovate in sectors from food and energy to health and beyond. To talk more about the trends and technologies that are reshaping industries while fostering positive change is the co-founder on this episode of Taking Stock. So I do want to talk to you about your world positive approach. Talk to me about this concept, the motivation behind starting it, and what it really means.
We started Obvious 10 years ago, and we started with this contrarian idea that the biggest companies of our time would be companies solving humanity's toughest problems. So think about the climate crisis, chronic disease, income inequality. We want to use venture capital to fund breakthrough technologies to improve and solve those problems, to make every American's life better. And that's what we mean by world positive venture capital.
And talk to me about the industries that you focus on that help achieve your mission and your goal.
Well, we invest in these three pillars. Planetary health, so that's about decarbonizing the economy, generating renewable energy, electrifying transportation. We invest in human health, and that's everything from better for you food to better healthcare companies and better biotech companies. And then lastly, we invest in economic health. And that's really about helping people find and do their best work. How do we help Americans get better jobs, get better trained?
And across these three sectors, what are the biggest trends you're noticing right now? And how do you identify which companies you want to invest in?
Well, there's one trend that spans all three of those pillars, and it goes by two letters, AI. I suspect this has come up in other conversations, but we're seeing AI as a major technology disruptor, and in particular for us in planetary health and human health.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio at the New York Stock Exchange. Well, on Tuesday, Meta announced a change in policy for its original social media platform, Facebook. It is scrapping its third-party fact-checking program and replacing it with community notes written by users. The company adding that it will allow more speech by lifting restrictions on certain topics that are part of mainstream discourse. Well, joining me now with more is Michelle Castillo. She's a president at TIWWG. She is a media expert, as we like to call her here at the New York Stock Exchange. Michelle, it's great to have you.
Great to see you again, Kristen.
How could this change impact Facebook users?
So you probably are used to posts being taken down or just seeing content being removed. This is probably going to be a little less common as you use Facebook now. So previously, Facebook had built this big system of fact checkers and automated systems to flag controversial topics. Zuckerberg now is saying that those policies went a little too far. Now they're going to rely on community members to flag lower level violations. So things that might be questionable won't be taken down. Zuckerberg said in a 5-minute statement that he felt that even if 1% of posts on Facebook were incorrectly flagged, that would amount to millions of posts, and that really was unfair for a lot of the users who now are really looking towards prioritizing free speech, in his words. Now, also another thing that you're going to see is more opening of topics, including less restrictions on talking about immigration and gender, for example.
I'm curious what this means for Meta. Users, I'm sure, will see a different experience, but when we talk about Meta big picture, what do you anticipate?
Well, I think this is a signaling of the shift of a lot of tech companies, including Meta, moving towards a more Trump-friendly environment. Now, we know that Meta and Amazon and even OpenAI, Sam Altman, donated $1 million each to the Trump inauguration fund. They're signaling that they're willing to work with Trump. And Trump's biggest complaint about these social platforms is that they were censoring free speech, in his words. So they're starting to make policies that are more amenable to this new administration that's going to start on January 20th. Now, you're also looking at Meta being criticized a lot for their policies by Republicans. They just see that this is going to continue to go forward, so they're really trying to shift their policies, shift their stances right now before they are going to be penalized in the future.
We've seen X under Elon Musk's leadership, formerly known as Twitter under Jack Dorsey, move toward this free speech model. With Meta joining on, do you expect other social media platforms will do the same?
I do think that it is going to be a shift towards this more community model. First, we're seeing a lot of these platforms spending lots of money towards AI, which means that their bottom line when it comes to earnings isn't as high as it used to be. So they're going to have cost-cutting measures. And one thing that they can cut is places that they know they're going to be penalized from the government for. So removing things like fact checkers, removing things like these automated systems, not only will keep the costs lower, it will keep their user base, which they feel is shifting towards a more freedom of speech view, happy, as well as really keeping politicians off their back at this time.
We have CES underway in Las Vegas. Michelle, I think you've been to this event
many
many times on the ground. How have we seen Meta be part of the conversation this year at CES?
Well, this fact-checking announcement, even though it came out during CES week and not at CES, has been a huge topic of conversation. Linda Yaccarino, who is the CMO of X, had actually applauded Meta, saying that this community notes model has worked for X and it will work for other platforms. We're seeing others criticize, like Jeffrey Katzenberg, saying that this opening up of free speech could really be detrimental. You could just see Meta is starting to fit in with the narrative, and CES is really a place where you see the trends for the year ahead.
Yeah.
So I think we're going to start seeing a little shift towards less quote-unquote policing by platforms just from this move by Meta.
When we talk about innovation and hardware, Meta does have a hand in that as well when it comes to virtual reality and some of its headsets. What is the status of those?
So one of its high-end headsets, the Meta Quest Pro, which competes competes against the Apple Vision Pro, that is actually going to be discontinued. I think that's a sign that the market is really not as deep on VR headsets or even augmented reality headsets as people might have thought in the past. So we're starting to see, again, cutting and curtailing of budgets in areas that aren't as prioritized or aren't doing as well as these companies shift budgets towards AI, which is another huge topic of interest at CES this year.
Yeah, I want to hear from you in terms of artificial intelligence, what innovations, the latest and the greatest we might anticipate, of course, after hearing from NVIDIA's CEO Jensen Huang. Must be a celebrity these days on the ground at CES after that keynote earlier this week.
But it's not even NVIDIA, it's all the companies announcing AI announcements. I was just looking at Delta, and Delta announced that their customer service app is going to be powered by generative AI. You have Samsung, they're announcing AI for all, really AI-ifying or artificial intelligence-ifying their home experience. Now, the question is this a fad? I don't think so. There are fads that have come and gone. Let's remember NFTs, that was one fad at CES one year. But AI has been there for a while. It's really evolving at a rapid rate. And I do think that this is something that is here to stay. And you're going to start seeing more companies replace workers in areas that they can with AI, for example, customer service, and really seeing how AI can personalize a lot of tech for people. CES is just a beginning of what we're going to see in the years to come.
Yeah, anything else on your radar, Michelle? We only have a few minutes left.
So I would say we definitely want to take a look at where platforms are going to be spending their money outside of AI. We had a lot of talk about the metaverse from Meta in the past. I do see a lot of people scaling back from that, but Meta's still really full on in the metaverse, according to Zuckerberg. So this is going to be a sense of where budgets are shifting. That could also be a sense, in the greater scheme of things, of hiring patterns in the future. We do see a lot of, as I mentioned, a lot of these companies are trying to cut costs. So if they are going to hire in certain fields, what does this mean for other jobs that are being cut in the future?
We will be talking a lot about jobs this week as well, with a whole host of jobs data on tap after that ADP report this morning. Michelle Castillo, media expert and consultant. Michelle, thank you for joining us always. All right, well, coming up, Tense Torrent is not only building computers for artificial intelligence, it also recently completed a 9-figure funding round. We'll have those details up next.
Welcome to Floor Talk. It's great to have you on the show today.
It's great to be here, Judy, and it's a real privilege to talk to you.
So you are the CEO of Agilent.
Yes.
Tell me about the company and what you do.
We're the people behind the scenes that keep your water safe, your food safe. We advance therapeutics, so we test pharma and biopharmaceutical drugs as they're released. So we're the people behind the scenes keeping the world safe.
Now, you held your investor day today at the New York Stock Exchange, and you introduced a new strategy. So tell me about that strategy and what it means for your stakeholders and the industries that you serve.
We're becoming more customer-first strategy, so it's a customer-led strategy led with our markets. So our three main markets are pharma, biopharma, clinical and diagnostics and applied. So we're really leading with our markets and seeing how we can bring more solutions to our customers and faster innovation across these markets. So we're really excited about it, and we've also launched a transformation in the company called Ignite. And that's really to help with our customers, making it easier for them to do business with us, for employees, making it easier for employees to work and be more productive, of course, and for customers and our shareholders, of course, to continue our growth.
Now, can you share more about these high growth opportunities and the solutions you're providing for them?
Yeah, I can share one really good example. So Forever Chemicals, you probably heard of that, PFAS molecules and compounds. We test for that globally, so it's a big emerging business for us. So we're the ones that help testing labs test for these molecules. And to give you a sense of our detection limits on our equipment, think about a drop of water in an Olympic-sized swimming pool. That's the level of detection we can do for these compounds, and it's, of course, moving into different modalities, so we're there to really test for these compounds.
Now, today you rang the opening bell to mark the 25th anniversary as a public company.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio at the Stock Exchange, and we are just about 10 minutes away from the opening bell. Of course, markets, jobs, the Fed in focus this week, as they always are, in addition to the Consumer Electronics Show currently underway in Las Vegas. I want to bring in my colleague, Trinity Chavez, with more. Trinity, good morning.
Hey, Kristen, good morning. And you know, the NYSE has one clock that has been making time for over a century. NYSE Historical Archives curator Anna Mello is taking a closer look into that story. Although the New York Stock Exchange was founded in 1792, it took more than 70 years for the budding exchange to purchase property. The New York Stock Exchange opened the doors of its first permanent building in 1865, and we've been right here on the corner of Wall and Broad ever since. That structure was demolished to build our current home on 12 Broad Street, but a few pieces of the old stock exchange were preserved, including this glorious walnut wall clock. This clock was custom built for the New York Stock Exchange and made right here in the great city of New York. The mechanism was completed in 1865, and when the cabinetry was completed in 1867, it was ready for action. The clock came from the shop of William F. Ladd, whose signature is visible on the pendulum calibration plate. This regulator clock runs on a movement using a pendulum and gears, and was far more accurate than other contemporary styles of timepiece. Regulator clocks were initially used in astronomical observatories and clock shops, or anywhere that required immense precision. Most clocks of this era would easily become inaccurate due to heat and friction, but the New York Stock Exchange boardroom clock was built to minimize time drift and ensure that the NYSE's marketplace ran smoothly and accurately. Its innovative design utilizes a liquid-filled pendulum, which is better able to compensate for the changes in temperature. This clock was built for such precision because it was used to measure trading windows when the New York Stock Exchange operated as a call market. Securities were traded one at a time, in increments of 5 minutes each. The time of day didn't matter as much as which trading window one was in, hence the unusual choice of clock face. At the end of each trading window, the president of the exchange would bang a gavel to signify that the trading of a particular security is over, and the time has come to move on to the next one. That is why, even today, when the closing bell is rung at the New York Stock Exchange to close the markets, we still bang a gavel to signify the end of trading securities. Today, the companies that list their stock on the New York Stock Exchange are as diverse as they are numerous. Some of the bank, railroad, and utility companies that listed their securities in the 19th century are still listed with us today. And they are now joined by companies in such varied industries as aviation, outerwear, biotechnology, innerwear, data security, footwear, cloud computing, and maquillage, just to name a few. The clock was first installed on the old trading floor in 1867, but by 1871, the New York Stock Exchange had by necessity adopted a groundbreaking new market model. The second industrial revolution was picking up steam on the heels of the first, mechanizing the world and fundamentally changing the way we live our lives. The wealth and population of industrializing nations increased at a breakneck speed, and what fed this growing and globalizing world economy was capital. Inventors, entrepreneurs, and governments needed funds in order to realize their visions, and naturally turned to capital markets to raise said funds. One of the inventions of the technological revolution that inexorably changed the way that all securities exchanges operate was the stock ticker, invented by Edward Callahan the same year as the New York Stock Exchange clock was completed, 1867. Brokers, businessmen, and anybody else invested in financial markets now had access to continuously updated stock prices and could make decisions accordingly. As a result of these changes, more companies and governments listed their securities on the New York Stock Exchange, trading volume increased, and the quotation book grew from 30 securities up to 300. Under the call market model of trading securities in 5-minute increments, the New York Stock Exchange was facing the prospect of a 25-hour trading day. Thus, in 1871, only 4 years after this clock began its work, it became obsolete, as the New York Stock Exchange became a continuous marketplace for the first time. The New York Stock Exchange pioneered this market model, employing specialists operating as points of sale alongside brokers in an open outcry format. The specialist and broker market model was adopted by exchanges worldwide and continued to be industry standard for decades. But today, all but one has closed its trading floor. When this clock was being utilized, there were about 30 securities listed in the New York Stock Exchange quotation book. Today, the NYSE trades 8,000 securities, including over 2,300 listed domestic and international issuers and 70% of S&P 500 companies. Of course, far more has changed here at the New York Stock Exchange and more broadly in our markets than the number of listed companies. 150 years after the New York Stock Exchange first became a continuous marketplace, today we can look back over a century and a half of evolution that has ushered in countless technological innovations that have increased efficiency to an astronomical degree. In the 1800s, when the New York Stock Exchange operated as a call market, in 5 minutes, one lone security was traded,
with no guarantee that even a single transaction would take place in that allotted time. Today, in the span of 5 minutes, our industry-leading technology is capable of processing over 1 billion messages. Each message is processed reliably at lightning-fast speeds in about 1/10,000th of the time it takes to blink your eye. Back in the 19th century, the amount of money that changed hands in the space of 5 minutes ranged from $0 to several hundred. Today, our peak notional exchanging hands in a 5-minute window is more than $150 billion, counting equities alone. Today, across our 5 equity and 2 options exchanges, we continue to see ever-increasing demand, resulting in 5-minute peaks of over 2 million individual trades worth 3 billion shares traded hands across 18,000 different listed equity and option securities. Time is immutable. Time cannot be rejected or escaped, but it can certainly be measured. Nowhere is the measure of time more imperative than in a securities exchange. For 157 years, this clock has been diligently ticking away, keeping time in the home of the epicenter of global capital markets, the New York Stock Exchange.
Now don't go anywhere. The opening bell is up next. On this episode of Taking Stock, we are thrilled to have May Habib join us. She is the CEO and co-founder of Ryder. We're going to be speaking to her about how they are bringing generative AI to large enterprises. Let's get started.
We've been in generative AI for the last 4 years, working on bringing generative AI to the enterprise. And what we've learned from folks is they need a full solution. LLMs are very powerful, but not enough to very quickly get to value on these mission-critical workflows.
And you know, you recently announced a $200 million Series C funding with some of the biggest and most influential companies backing this effort. Talk to me more about the partnership and why was now the right time to have this fundraise.
We had some incredible corporates join the round: Salesforce, Adobe, Workday, IBM. And there's a real realization that enterprise generative AI, especially where we're going on agentic workflows, requires a real understanding of these real-world mission-critical flows that is just much more complex than folks thought. And I think being able to stitch together multiple systems, multiple departments with generative AI, rewiring these flows, requires really a coalition. And that's what is so exciting about the Series C that we raised.
What are your plans for this new funding round?
Certainly expand the team, expand our footprint, but invest in this next generation of models, action-oriented models that are capable of autonomous action inside of the enterprise with reliability, consistency, security that enterprises need.
Talk to me about how your past experiences have helped shape the ethos of your company today.
I grew up in a small family business and learned a lot about the importance of staying really close to the details.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in the studio at the Stock Exchange. Well, in just a few moments, Exodus is going to ring the opening bell and kick off today's session. Trinity Chavez joins me now with more on today's celebration. Trinity, what's in store?
Hey, Kristen. Well, Exodus is celebrating its recent listing on NYSE American with shares officially beginning trading last month. The crypto wallet platform established was in 2015. It offers users the opportunity to store, manage, and swap blockchain assets in one place. It also adds that its mission is providing exchange services to help process the increasing volume of crypto transactions. Now, Exodus adds that its reserves include more than 1,900 Bitcoin worth over $180 million and 2,660 Ether worth over $8 million. Now, today's bell ringer, JP Richardson, will join our colleague Judy Shaw later on in today's show on the trading floor about how the recent Bitcoin rally has impacted activity on the platform. And Kristen, what do you think we should anticipate after Exodus rings the bell this morning and opens up the markets?
Trinity, that's exactly right. We've got a lot in store, and of course, investors closely watching the jobs data all week long, even as many of these innovations are debuting at CES simultaneously underway In Las Vegas, earlier this morning, we got the private payrolls number. 122,000 jobs added last month. My markets guest up next after the bell will tell us what that might mean ahead of the non-farm payrolls report that we'll get on Friday that the market watches closely. Down here on the floor of the New York Stock Exchange as Exodus kicks off the start of trade on this Wednesday. It is a shortened trading week. The stock exchange will be closed tomorrow, of course, for the morning of President Jimmy Carter. As we dive into the markets, now just one full week into January, I do want to bring in Thomas Hayes. He's a chair and managing member at Grayhill Capital. Thomas, great to have you on the show.
Great to be here, Kristen.
And as we start this new year, so much focus as to what is in store for stocks. We've seen some choppiness. The S&P just about 3%, though, from its record high. What are you watching?
Yeah, I think this year is going to be a year of slightly more subdued returns and a rotation. So it's not going to be as easy as parking the money in the indices and watching the Mag 7 take you to the promised land. I think what you're seeing is the deceleration in the earnings growth of the Magnificent Seven. So they had 33% earnings growth in 2024. That's going to decelerate down to 21% in 2025. However, you're paying 33 times earnings for it. So you haven't seen any derating in the Mag 7. And if you contrast that to small caps, their earnings growth is going from 8% in 2024 to 21% in 2025, and you only pay 16 times. So half the multiple for the same earnings growth. I think we're going to see a lot of fits and starts as the market starts to recognize where the value is.
What does that mean for the rest of the market, knowing that the Mag 7 is expensive?
Yeah, I think you're going to see huge opportunities under the surface in the unmagnificent 493. Some of the areas that got hit exceptionally hard in December, you know, we did see the broadening start in earnest in July of last year, and it really hummed along until November. And then there was this abrupt interruption as yields blew out, as fears around the Fed in December. We saw the exact same thing in Trump 1.0. Right after he got elected, the dollar rallied, yields rallied between the election and the inauguration. After the inauguration, all of that cooled down.
Because we're talking about yields and the economy, I do want to get your take, Thomas, on the ADP print that we saw today. Because yields have been such a topic of conversation in terms of the direction of this market, 122,000, a little bit less than what was actually expected by economists. What might this mean for that non-farm payrolls report on Friday?
Yeah, we keep toggling between bad news is good news is good news. I think this is a situation, given what yields have done, we do want to see a little bit cooler labor market to keep the Fed possibly in the game, number one, and to put a cap on yields. Yields have really blown out a little bit since the election, just like we saw in 2016. I think a cooler report, if the ADP is any indicator of the non-farm payrolls report on Friday, that's going to be a very good thing for the market. Yields will start to calm down and compress, and the Fed stays in the game, and equities will like that.
International has been out of favor for a long time. Does 2025 change that?
I think it's in line with the theme of what I'm talking about. Price is what you pay, value is what you get. You're going to have over 13% earnings growth in international. It's trading at 15.5 times earnings. In the US, you're going to get 14% earnings growth, and it's trading at 22, 23 times. So the thing that people forget, because we're all creatures of habit, recency bias, right? Since 1927, value has outperformed growth by 4.4% per year, okay? Only in the zero interest rate environment since 2010 have you seen growth dramatically outperform value? So unless you believe we're going back to zero interest rates, you want to have some lower price value in your portfolio. You don't have to shift the boat all the way right away, but start to ease into where there's value and opportunity and still growth in earnings power.
Particular stocks then, Thomas, that are on your radar?
Yeah, well, I'm known around these parts as Turnaround Tom because I like buying stocks that are down a lot, but have an opportunity to turn around. One is Advance Auto Parts. They're an auto retailer. They got absolutely decimated. They overexpanded. They brought in a new CEO, Shane O'Kelly. He came from HD Supply, was a $7 billion business. So what has he done? He's taken solvency risk off the table. He sold the Westpac Canada business, $1.5 billion, paid down debt. He's closing all the non-performing stores in the West Coast that are very spread out, so they weren't getting economies of scale. 10% of the stores. He's expanding in those regions where they're number one or number two, consolidating the distribution centers. They are targeting $630 million of operating income by 2027. The last two times they traded at that level of operating income, it was $180 to $220 stock. It's trading at $45 today. So this thing can really grow over the next couple of years under the right leadership.
I want to talk about small caps as well. We've seen optimism return, certainly with certainty following the election. Small caps have lagged behind those magnificent 7 stocks as well. We talk about growth, we talk about value. How do small caps fit in?
Well, I think small caps is where you're seeing the most value. One of the names that we love is a company called Cooper Standard. Again, 2 auto turnarounds for you. You know, people are sleeping listening to this, but this is where the opportunity is going to be in 2025, 2026. This company's down 90%. It had a refinancing risk. They got it refinanced in 2022. They do the sealing systems around the doors, boring stuff, fluid transfer systems. The operating leverage in this business is huge. All this is a play on volumes increasing. We did 16.8 million annualized SAR in December. If you remember, those auto numbers surprised everyone. The volumes are coming back up. The last time they did 17 million, the business earned $7. It was a $140 stock. Stock's trading at $14. They've taken $400 million of costs out of the business. So this thing, we believe, over the next 2 years could earn $7 to $10 a share, which means, you know, you apply a 10 times multiple, it's really going to move.
All right, Thomas Hayes, in from the West Coast. Thomas, always a pleasure. He's a chair and managing member at Great Hill Capital. Thank you.
Thanks for having me.
All right, well, stay with us because up next, we'll see, as we see more cash-saving platforms, we're going to speak with the Chief Revenue Officer at CES at Fetch about how that company is disrupting the way that people shop.
Colleen, welcome to Floor Talk. It's great to have you on the show.
Judy, thanks for having me. I'm so excited to be here.
So, Colleen, you joined Planet Fitness as CEO in June. So tell me about your first 6 months.
It's been a very fast first 6 months. I've really leaned into spending time in our clubs and getting to know our franchisees, talking with our club team members and seeing how our members utilize our clubs. I call it feet on the street. It's been really insightful. And we've also worked on our strategic imperatives and kind of codified our roadmap for our growth ambition.
So tell me about your growth strategy and vision for the future of Planet Fitness.
Our 4 strategic imperatives really start with refining our brand promise and then making sure we pull that through in our marketing messaging. We're also leaning into member experience to make sure that we're connecting with our membership and enhancing our relationship with our members and delivering a format both inside and outside the clubs that's most meaningful for them and is going to enable them to accomplish their fitness goals. And then we lean in on format optimization and our equipment mix. And that's making sure that we've got the right mix of equipment for how our members want to utilize our clubs today. And when we get all of that right, and we're thoughtful about unit economics and build cost for our franchisees, it enables us to turn up the afterburners on growth.
Now, how will you redefine your brand strategy and communicate it effectively?
We're growing stronger together, and we're all strong on this planet. We're seeing across generational cohorts a focus on utilization of strength in our members' workout routines and our prospective member workout routines. So as we've done
Welcome back to NYSE TV Live. I'm Trinity Chavez at the New York Stock Exchange. Now, CES is underway on the West Coast in Las Vegas, Nevada, and Fetch is in the spotlight with some big announcements. A new Nielsen study is naming Fetch the leading digital channel for influencing consumer behavior, outperforming both traditional and digital advertising. But what's driving this success, and how is this company shaping the future of the industry? Here to break it all down and give us a scoop on what's happening on the ground at CES is Robin Wheeler, Chief Revenue Officer of Fetch. Robin, it's great to have you on the show with us.
Thanks for having me, Trinity. I'm excited to be here.
Thank you. Okay, so let's just talk about the study right away. This recent Nielsen study positions Fetch as a leading digital channel for influencing consumer behavior, right? But what specific factors or innovations do you think are really driving this success compared to traditional and other digital advertising channels?
Absolutely. I mean, I've been in the advertising industry a long time. As consumers, we're facing advertising everywhere we go. It's disruptive by nature, whether you're trying to watch a TV show, whether you're trying to connect with your friends on social media or read the news, advertising interrupts that. But that is not the case on Fetch. It's the opposite, actually. Brands are the center of joy on the platform. They're the reason that people are actually coming to the platform. They want to find out who's on there, where should they be shopping, what should they be buying. And that is a really big factor in consideration mindset, and ultimately what I think is leading to us being such a leading channel for driving digital results.
And how does Fetch measure its impact on influencing consumer behavior? What makes it stand out in terms of delivering value to brands and users compared to other things out there?
Well, and that's what's so great. What's good for the users is also good for the clients, because my job is to get as many brands as possible on the platform to bring a variety to our consumers. The more brands that are there, the more ways they can earn, the better the experience is. And so we take performance really seriously here at Fetch. And we have a proprietary measurement solution that we use. It's a test and control methodology that allows us to really look at who's exposed to these offers on Fetch and what is the behavior that they then go and do, which is purchasing. So sales, I'm talking about new buyers, all of the metrics that people care about today. So we have a rigorous measurement capability that we do. But this Nielsen study was really more about looking at us the way the industry does as well. So the Nielsen media mix, a little marketing jargon for you, but media mix model that Nielsen is a leading provider of is a very common measurement methodology that consumers use. And so we really wanted to look at it across the board, which is why we commissioned that study.
But we are seeing more and more cash saving and rewards platforms really entering the market, especially in today's society. So how is Fetch influencing the broader advertising and consumer engagement sector?
Exactly. Especially if you think about the younger generation. Gen Z wants to save money. They look for value. They're much more brand promiscuous. And so if you're able to give them a reason to keep coming back to your brand, which is saving money, earning points, doing it in a way that's fun and engaging and gamified, you are going to bring that value to the consumer and you're going to win. And so in an age where it's all about retail media and commerce media, Fetch is really leading the charge because we have a holistic view of the consumer. Our consumers are scanning 11 million receipts a day to the tune of $179 billion in annual GMV. If we were a true retailer, we would be third only behind Walmart and Amazon. That gives us an amazing amount of data to understand the consumers better, and there's no better indicator of future purchase than your past purchase. So we use those signals to be able to target the consumers in a precise way that drives those outcomes. And I'm at CES on the floor right now, or not on the floor, I'm in the hotel room, but I'm at CES, and everyone's talking about data. Data and measurement is what it's all about. And so we're really positioned to help deliver, especially in an economy like this where consumers continue to want to save and look for value.
And Robin, you sort of beat me to the punch because you are there on the ground in Las Vegas at the largest technology show in the world. So talk to me about what the biggest trends are in addition to data that you're seeing.
Well, of course, I'm not going to, leave this chat without talking about AI. It's certainly the center of the stage at CES, and not just generative AI, but also agentic, and also physical AI has been part of, NVIDIA's keynote a couple nights ago. We're talking about AI as it can get into healthcare and travel, but if you look at, and then the robotics, of course, but as you think about where we are, which is in the C space, more about advertising media and where that meets with technology, it is still about AI and how it can help inform campaigns, better targeting, help make efficient creative. We're going to continue to see that trend as we look towards next year. Data, measurement, retail media, CTV, commerce media, and creators in live TV or live sports.
Now, briefly, we have about 30 seconds left. I just want to know what sets this year's CES apart from years past.
I think it's really the year that we're going to see AI become even more actionable and really more proliferated through everything that we do in marketing and advertising.
A lot of key takeaways right there. Robin Wheeler, Chief Revenue Officer at Fetch. It's always a pleasure.
Thanks for having me, Kennedy.
Now, earlier this hour, crypto wallet platform Exodus rang the opening bell as it celebrated its recent listing on NYSE American. My colleague Judy Shaw is on the trading floor with the company's CEO. Judy, what's happening on the floor?
That's right, Trinity. I am here with JP Richardson. He is the CEO of Exodus. JP, it is wonderful to have you on NYSE TV.
Oh, it's great to be here with you. Thank you.
So congratulations on order for your recent listing on NYSE American, and you just rang the opening bell to celebrate that.
Yes.
So tell me, what does it mean to ring the opening bell this morning?
It absolutely just means the accomplishment that the team that we've done over the last few years, the entire history of the company, the last 10 years, and everything that we've done for self-custody and crypto, it's just such an honor and a great accomplishment.
So JP, tell me, what sets you apart from others that are in the crypto industry?
Yeah, there's really two key things. It's going to come down to our beautiful user interface and our absolute focus on self-custody, empowering people to control and own their assets.
Now, you mentioned self-custody. What are you doing to make that easier and safer for users?
Yeah, we have to, it really comes down to removing all the complexities of thinking about private keys, complex crypto addresses, or anything of that nature. We're just making it super simple for the mainstream to get in and use cryptocurrency.
All right, JP, as you look to expand globally, tell me, what's next for Exodus?
It's really, we're going to expand all over the world. We're going to offer the ability to buy and sell crypto, make it super simple. And again, continuing to remove all the hard things about crypto. But a lot of things that are going to be coming for us is merging social networking and cryptocurrencies and wallets together in one user experience. So there's a lot of really cool things coming for us in 2025.
Okay, talk to me more about that. Tell me some of the cool things that are coming for you in 2025.
Yeah. So a lot of people don't know this, but we have a platform and a product out there today, right now, where people can, it's actually a wallet for Twitter, for X, where people can easily send cryptocurrency to each other and not have to think about crypto addresses, just sending it to an X handle. So right now, people are sending crypto to Elon Musk, and he hasn't even claimed it yet. He has over 100,000 of crypto right there in his X wallet that we've created, and it's all out there now.
All right. So tell me, you're an expert in the industry. What's your outlook for 2025 for crypto?
Oh, I think with the way that things have shaken up over the last few months, I think crypto is going to be such an exciting year for crypto. I think we're going to see more ETFs. I'm not going to speculate which ones, but I think we're going to see more ETFs, which is going to be fuel more excitement for the industry.
All right, well, it definitely sounds like exciting times ahead for crypto, for Exodus. So it sounds like we may be talking again in the future.
Absolutely, that would be wonderful.
All right, Trinity, back to you in the studio.
Thank you so much, Judy. And after the break, NYSE listed Accenture released its latest findings on how executives are viewing AI. So stay tuned for those results. Today we're talking about the future of dining with an iconic brand, P.F. Chang's. With 300 restaurants around the world, they're taking a bold new step into fast casual dining, a new concept called Pagoda. And I have the CEO here to tell me all about it. Only on Taking Stock. Now, obviously, your focus is your 300 PF chains that you have around the world. But talk to me more about this new Pagoda concept.
The type of service and food that we serve, which is made from scratch, high quality ingredients, great hospitality, great ambience, and that can be used in more use cases, more need states, more occasions, more people more frequently. So the light bulb moment, if there's one, is wait a second, we can do a great job for you on a lunch during the week. And, and it can be very fast, it can be very affordable, it can be very, very abundant, and of course, delicious. We just have to adapt the way we do things, steps of service, abundance, price points, to be able to serve you this way.
Now, while you're remaining so agile with this ever-changing landscape in the food and beverage sector, how do you sustain your authenticity?
The brand has to know, what they stand for, right? In our case, is every day is a celebration. We want to elevate every occasion and make it special to people, right? So if it's a day-to-day lunch, we created a concept here in the US that we call express lunch in our bistros, which is a lunch in 20 minutes or lunches on us. It's the same ingredients, same kitchen, same steps of service, just an individual bowl because that's the occasion there. So understand who the brand is, what the brand stands for, and what the consumer, the customer, in our case, the guests, the way they want to live their lives, and adapt ourselves.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. Well, markets are on the move today, and that's after the ADP private payrolls number did come in a little bit lighter than expected at 122,000. Of course, this does set the scene for the non-farm payrolls report that we'll get on Friday. Questions as to what it might mean for the economy ahead. That number will hit at 8:30 a.m. Eastern, and we will cover it on our show Friday after markets are closed tomorrow for the morning of President Jimmy Carter. Well, companies big and small have been bullish on artificial intelligence as the technology has continued to evolve. One company measured the enthusiasm, and I do want to bring in my colleague, Trinity Chavez, with more. Trinity.
Hey, Kristen, that's right. The age of AI is here, and it's more autonomous than ever before. A new report from Accenture Technology Vision 2025 reveals how AI is set to bring unprecedented autonomy to businesses, transforming industries and reshaping the future of work. So what does this mean for companies, workers, and the global economy? Well, joining us now to break it all down is Lan Guan. He is Chief AI Officer at Accenture. Good morning, Lan.
Good morning, Trinity. Thank you for having me here.
It's a pleasure to have you on the show. Now let's just start talking about the key components of this report and the highlights. What were the key takeaways for you as we're seeing a new age of AI bringing unprecedented autonomy into business?
Sure. So this is our 25th year of launching Tech Vision report. And Trinity, I can tell you the timing of this cannot be more perfect. So if you think about a couple things that our clients, our business leaders are facing every day, this is exactly why we publish this very exciting trends, in our recent report. So first of all, every industry is changing. I'm actually here at CES. And I can tell you, I met so many automotive companies. Everybody's telling me, just using them as an example, their industry is changing, their products are changing, are becoming, computers on wheels. Their customers are changing. They have to work with the younger Gen Z customers who has very different preferences and needs. And just using them as an example, many industries are going through this significant transformation. I would say the second thing, of course, this happens in the age of Gen AI. So many of our clients they have already embraced AI, but they are still doing a lot of experimentation. Less than 10% of the companies that we work with, they have actually scaled Gen AI. So a lot of them are coming to us and asking, okay, during this time of change, how do I actually leverage AI or Gen AI to help my company transform all my functions, drive drive this kind of full autonomy that you were talking about earlier, so that my company can embrace the technology, boost productivity, right, drive this kind of economic prosperity, but also build trust within my workforce. So this is the overall, context of, why we are releasing these trends in our recent report, why we're so excited to bring these findings to our clients.
But I do want to talk to you about the rapid development of AI and Gen AI, especially when it comes with AI autonomy as it's becoming increasingly on the rise. What does the future of human-machine collaboration look like, and how can businesses go about approaching and implementing this into their business strategy to really enhance this relationship?
Yeah, that's a really good question, and I think the way that human and machines will be working together in the future, I think it's going to be very cohesive. That's why one of the trends in our report is about it's called binary Big Bang. Basically, it's indicating that the age of a Gen AI is going to be upending, like for example, the software, how software is getting done today. And what we mean by that is, today there are a lot of, software out there using traditional approach, instruction-based approach. Everything is pre-programmed with business logics, right? So imagine that now we can leverage this new architecture, what we call the intention-based architecture, which is leverage the cognition capabilities of the large language models to help the business leaders, right? Disrupt the existing workflows, functions. So this is the kind of autonomy that we've been dreaming of. But this doesn't mean that workers will be replaced. This actually means that every human, every business leader will be, armed with what we call a squad of digital agents. Think about these agents are autonomous. These agents have, capabilities to perceive the world. These agents have, is empowered by large language models. These agents, more advanced ones, are also demonstrating ability to do what we call the slower thinking. Agents can break down the problems for you. Agent may not be getting things right in the first place. Agent can actually, take human input to do self-reflection. So I'm giving you all these examples to portray that, in this new way of working, digital agents, AI agents will actually be working more closely with humans. And in fact, one of our trends in the report is this learning loop. Right? We emphasize because of this new way of working, because of this disruptive technology, humans will actually be playing a bigger role, right? During, for this learning loop. And we have marketers, we have supply chain analysts, we have our finance, analysts. Now they're actually working with AI on a daily basis. Their role is becoming something to train the AI with reinforcement learning with human feedback so that AI can continuously learn, AI can continue.
Amazing. A lot of key takeaways right there on the ground from CES in Las Vegas. Lan Guan, Chief AI Officer at Accenture. It was a pleasure. Thank you.
Thank you.
Now, I do want to bring in my colleague, Kristen Scholler, as we sign off to this show. It's been an action-packed show, Kristen, and more to come this week.
Absolutely, Trinity. Our CES coverage will continue. Same with the markets. That's going to do it for today's show. We'll see you back here Friday morning, 9 a.m. Eastern.
Thank you for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing.
This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.